as you referred to, we had a healthy 3% growth in our net asset value this quarter, and we saw positive contribution from listed companies, from EQT. Then in Patricia Industries, net asset value declined by 6%, driven by multiples and some FX headwind, primarily related to the weaker dollar, of course. But underlying, and to your point, we saw healthy top-line growth of 5% organically in the Patricia portfolio. That's where we have our wholly owned companies. And really, if you look and double-click on that, what you see is we have a number of companies with really strong product and solution offerings out there that are driving and contributing to growth. Then, of course, in times like these, uncertain times, more time than normal is spent on efficiency and agility, while, of course, holding on to the long-term investments for future-proofing. And then finally, I think we see significant investment activity really across the portfolio, which is good.
Christian, there's a lot in there as well. And let me just explore one or two avenues, if I may. You talked about wholly owned companies, and we talked also there about the listed companies where you have significant, if not majority stakes as well. A lot of people at the moment, and Christian, you'll be aware of this more than most of the people watching this show, is that there is a big debate now about private assets versus public assets as well. You obviously have, given what you've just said, publicly owned assets and private assets. How do you think valuations look between the two different areas?
Well, I think for us, as you said by way of introduction, we take a long-term view of things, and really we see that we have the toolbox to create value both in the public market. We have about 70% of our assets in listed companies, and on the private side with EQT and Patricia Industries. And I think ultimately what's most important is for us that we engage with really strong platform companies with good prospects for profitable growth based on strong market positions, based on constant innovation, etc. And then also, of course, that we are able to engage as owners in these companies, typically through the boards then. But of course, it differs in terms of how you engage on the listed side and the private side.
And Christian, you've been involved in both these areas, for as long as I have been looking at Investor as well. And yet, all of a sudden, it's so hot to talk about private sector assets. So I'm just wondering, has that made it more difficult for Patricia and indeed for EQT to find assets at good valuations in order to put into the portfolios, given the fact that there is so much more money coming into this sector?
I think it's a great point. I mean, competition is really, really fierce. I would say both on the public side and the private side. But if I take on the private side, certainly that's the case. And it's interesting because if you look at sort of the short-term movements that you sometimes see on the private market, for the private assets that we are looking for, i.e. high-quality companies with sort of long track records of good profitable growth, etc., really there are very seldom times when you can make a bargain. So we're not bargain hunters, but we're in this for the long term. And then on the positive side, I would say that between our focus markets, which are the Nordics and North America, there are really good investment opportunities. And I would also say that what we have seen a lot of is add-on acquisition from our existing companies. So a platform company like Advanced Instruments now significantly expanding by adding Nova Biomedical, which we announced last quarter and closed in July.
Just to follow up on Steve's question around, the state of private markets, there is a lot of debate around whether we've seen peak private equity, with private equity sitting on 30,000 unsold companies, and we saw a buying frenzy when valuations were high, rates were low. That situation may never reemerge. Sounds like you disagree, though, that you don't think we have seen peak PE.
I think your comment is very valid, and I think what will happen on the private side is sort of a bifurcation. So I think in times like these, when interest rates are up and competition is really fierce again, you will see which companies or which asset managers have a toolbox that can really build strong companies over time, and that is ultimately what will pay off. While let's say the financial engineering part of the value creation will be less pronounced.